What's up, Investomaniacs? Your boy Knight Rider here, and it's time for your Robinhood stock market update. Zynga drops $1.8 billion to acquire Turkey's Peak Games. That is the biggest Turkish startup exit in history, so congrats to Peak Games. But should you invest in Zynga? Zynga is the social gaming giant behind mobile hits like Farmville, the whole Farmville franchise, Words with Friends and Words with Friends 2, Zynga Poker, Wonka's World of Candy, and OK Plus. If you've never heard of OK Plus, it's okay. You probably just haven't spent much time in Turkish coffee houses. Zynga just dropped a supercharged $1.8 billion to buy Istanbul-based gaming company Peak Games. It's the first $1 billion plus acquisition of a Turkish startup in history. Hey, this is not Zynga's first venture into Turkey, by the way. Back in 2017, Zynga snatched up Peak's mobile card games division, which includes Rummy-style OK Plus, for $100 million. Apparently, they liked what they saw, so they came back for the whole darn company. This acquisition is a huge growth opportunity for Zynga and its in-game microtransaction business, as well as its smaller advertising business. You know, those annoying ads you accidentally click on in between your games. Hey, potential instant success. Peak's Toon Blast and Toy Blast titles have more than 12 million daily users combined and are among the highest grossing games in the app stores. Global reach. Most of Peak's users are outside the United States, whereas Zynga's primary market is in the United States. Zynga says cross-selling across Peak's users their own existing games in their catalog will boost its total daily users by 60%. Zynga thinks that'll win it a $40 million sales boost for the year.
That was easy.
The takeaway? Zynga acquired its way back to relevance over the past couple years. And relevance is all about those forever franchises. You know, the games that don't just have a fad for a year or two, but they stick around. After its 2011 IPO, Zynga stock plummeted 80% in its first public year of trading, but the stock has tripled over the past 5 years, in part due to Zynga's changing strategy of purchasing popular games and then cross-selling users. So you see, for Zynga, because they have such a large catalog and they can cross-sell, a popular game is often worth more to them to whoever originally, or compared to whoever originally developed it. Zynga has nearly spent $1 billion on acquisitions since 2017, but my thoughts?
Don't buy.
Let's take a look at some of the financials. Now, let's just look at the bottom line. We'll keep it simple. They were losing money from 2011, and a massive amount of it, by the way. Look at that. In 2011 alone, they lost over $400 million on the bottom line, all the way up to 2016, where they were still losing over $100 million. But you say, but Knight Rider, look, they turned profitable in 2017. Why, yes, they did. They made $27 million in 2017. They made $15 million in 2018, and they made $42 million in 2019, and their trailing 12-month is plus 67 million. So that is actually some pretty solid growth. That's good, except for the fact that they are still actually losing money. Let's take a look at their retained earnings, or in this case, retained losses. So back in 2017, despite being profitable that year, they were at $1.7 billion in retained losses. They made money, at least according to kind of the way you do your financials, on 2017, 2018, and 2019. But by the end of 2019, they had added another $100 million to their retained losses. So despite making a little bit of money, okay, hey, we made $42 million last year. That's good, but not when your total retained losses is almost $1.8 billion. In addition to that, it's not cheap. Okay, you're making money. That's good. You are, at least as of the past couple years, you're growing the bottom line at a good pace. that's good, except you're paying still way too much for it. Look at this, a 143.5 PE. That's just not a PE that I feel comfortable paying for, especially when the balance sheet is as horrible as this one is. $1.8 billion are retained losses. So I would say take a pass on this one. Hey, that's it for this video. If you enjoyed, I'd appreciate a thumbs up and a sub. Peace.